Hey, good morning. This is Jerry here at Wealth Dynamics. Hope you're having a terrific day. I'm on my way to the Wealth Dynamics headquarters right now, and I wanted to give you a quick word on investing. So the question I'm posing this morning is, do the wealthy invest in the stock market? Now, you guys know that I don't love the stock market. It's one of my least favorite places to put money. And so I want to really look at whether or not the wealthy actually invest there. Now, the answer is yes. The wealthy do invest in the stock market, but it's not the way you think. So when you think about investing in the stock market, if you're the average person watching right now, you're thinking about your TSP plan, you're thinking about your 401k plan, you're thinking about, your pension, you're thinking about Vanguard, you're thinking about all of these things that I consider retail financial products. Okay, now a product, in my opinion, is different than a stock. A product is a arbitrary financial tool that a bunch of Wall Street blue collars sat around, or white collars sat around in a boardroom coming up with in order to generate profit for a financial services firm. That is a retail financial product. Okay, so I don't classify that as an investment. I actually classify that as a consumer product. Maybe you make money, maybe you don't, but you know who definitely will is the person that sold it to you. So here's the deal. The wealthy don't invest in those. Okay, so the wealthy are not putting money in their 401k plans. The wealthy are not counting on their pension. The wealthy are not doing Vanguard. The wealthy are not doing American funds and Fidelity mutual funds. If you look at, for example, Warren Buffett's portfolio, what you're going to see is a portfolio full of single stocks that he hand selected. Okay, it's not a bunch of randomized basket of securities inside of a mutual fund that Warren Buffett holds. It's single stocks that he hand selected because he studied and understands and wants to own the business that the stock represents. Now, you might be watching this and you're like, oh, well, Jerry, my financial advisor works at Merrill Lynch or Edward Jones. I own stock. Unless your financial advisor is Warren Buffett, it's not the same thing. The way Warren Buffett selects stocks is a lot different than your financial advisor buying a couple hundred shares of Disney because the pricing is good. That's not the way Warren invests. That's not the way the wealthy invest. So the wealthy do invest in the stock market, but they're not sitting there buying consumer financial products. They know better than that. Okay, they know that those are advertised to get money out of the hands of the consumer, to put money into the market, to cause market displacement, so that the market continues to trend upward. That way the market makers can continue to make money on the market changes. That's the sole purpose of a financial product. That's what a mutual fund does. Okay, you get enough people in the pool, it makes it look like the water's high. They start getting out, the water gets down again. It's not finances, it's science, right? So if you're looking at investing right now, if you're putting money in the market, I want you to realize that if you're investing in mutual funds and ETFs and all of these financial products that are invented by the retail side of that business in Wall Street, you're a consumer, not an investor. Now, if you're investing in stocks, I want you to realize the way Warren Buffett does it is not just Disney looks good, Apple looks good, Amazon looks good. Warren Buffett looks for undervalued, underappreciated stocks by studying their books. He actually looks at the financial statements and balance sheets of these companies. Now, I guarantee Warren has some software and some tools that you probably don't have, which is why he's able to do that kind of investing. No different than when you get into commercial real estate. If you don't have certain software and access to brokers, you can't see the numbers on deals. You might be able to see the basic stuff advertised online, like their cap rate, but that's not how you buy a deal. You've got to look at the actual numbers, expenses, and income. So if you're going to have all of that stuff, then I would say, all right, maybe you can invest in the market. But if you're not doing that, you're really investing irresponsibly. And I would say that you're what I call victim investing. You're giving your money to somebody and hoping something good happens to you. That's called victim investing. That's a terrible way to invest. So if you're watching this right now, and wealth matters to you, not retirement, wealth. Wealth means abundance and prosperity in all areas of your life, and you're going to have to financially fund that. If wealth matters to you, then one of the things that you need to think about is if you're doing retail financial products and you're in the market, it's actually slowing you down. Okay? It's actually slowing you down. And what I mean by that is when you put money into that mutual fund and in 5 years when it tanks, it cuts in half, it takes you twice as long to get your money back. Not only that, the entire time you paid fees, did know that the average fee, which is about 1 to 1.25% in a mutual fund, when you add that up and total it over 30 years within a fund, it's about 30% of your overall balance that went to fees. So guys, this is killing you and you don't know it. You think you're doing something smart. You think you're doing the right thing because your coworkers do it, and that really smart looking guy with that paper on his wall down at the financial advisor office said to do it, and your dad said to do it, and your mom said to do it, and your college professor said to do it, and it's all over the commercials on CNBC, and it looks really sophisticated when it's not. It's a terrible place to put money. And if you're not a real investor, meaning you're not a market maker, you need to stay out of the stock market. Now, one thing I'm going to end on, back to Warren Buffett. Okay, you guys have heard Warren Buffett probably say, hey, I think that you should invest in S&P index funds. Realize, Warren Buffett is not a sweet old man. Warren Buffett is the 3rd or 4th richest man in the entire world. So what I mean by that is when Warren Buffett gives you investment advice, it is not in your best interest. He's not just this helpful old guy who's trying to give you something that's going to give you a helpful tip on your retirement plan. Warren is thinking about, how do I get this idiot to do something stupid so that I can profit on it? When he says go into the Vanguard S&P fund, he's trying to cause market displacement so that you'll continue to be in there as a consumer, raising the water, so that the market will move and he can make money on it. He's not thinking about your retirement plan. So when you pull up his YouTube video or his article and, man, this guy says do the S&P, like, realize he's doing that from a predatory stance, not from a I'm your next door neighbor and I'm Mr. Rogers and I'm going to help you. Okay, you really need to understand that a billionaire is not giving you helpful, handy tips on how to maximize your retirement portfolio if it's not profiting him. So make sure you think about that. Now, guys, before I sign off, I'm going to post something in the comments for you really quick. So if you're watching this today, I just posted a link in the comments. It's jerryfetta.com/speed. And if you've been trying to build wealth, if you've been trying to get there and it seems like it's taking too long or you're not making progress, I want you to check out the link. Now, I do want to disclose everything on the link is free. So there's no catch. You're not going to be, tricked into buying something online. It's not going to be one of those internet network, influencer things where you've got to pay money to access the $9,000 masterclass where it's really just a bunch of webinars and videos. That's not what this is. So it's totally free. Check out the link, and it's going to give you an entire course on some of what I've covered with you today. So if you want to get more information on that, there's an entire course on that link. There's an ebook that I wrote that's also free. You can download. There's an article that I wrote that's free as well. Download that. And if you really want to get in touch with us and get more involved with your wealth creation, there is a 37-question assessment at the bottom. Okay, so if you take that assessment, if you take that assessment, that's going to give you a chance to send out a 37-question assessment. It's called the Wealth Potential Analysis to my team. And if you do that, we'll jump on a call with you. We'll grade your assessment with you. We'll give you the answers, and we'll help you come up with a strategy in order to start building wealth faster. And again, all of that's entirely free. So guys, I want to thank you for watching. Make sure that you like, share, and subscribe, and I will talk to you soon.